Hey everyone, welcome back to the channel. If you are new here, please hit subscribe and tap like so you do not miss my deep dives into EV battery tech, breakthrough materials, and companies pushing the edge. Today, we are going to talk about QuantumScape, ticker QS. It is one of the most watched names in the solid-state battery space. There are reasons to be excited and reasons to be cautious. I want to go through what they do, what developments have moved the stock, what the upside could be, what could go wrong, and what to watch if you are evaluating QS as a speculative play. And as always, nothing here is financial advice, just information. QuantumScape is developing solid-state batteries with a lithium metal anode. The goal is higher energy density, better safety, faster charging, less risk of overheating, and eventually more affordable EV batteries with longer range. They have been hailed as a promising contender to address the limitations of current lithium-ion battery technology. Their progress includes developing ceramic separators, improving manufacturing processes, and working with partners like Volkswagen to scale up. They are still pre-revenue in the solid-state battery business. The technology is not widely commercial yet. Much is research, development, piloting, and prototyping. One big catalyst is their announcement of a new manufacturing process called Cobra. This process reportedly speeds up the heat treatment of a battery separator component by 25 times over the prior Raptor process. Separator manufacturing is a bottleneck in many solid-state battery designs. This news triggered strong stock movement. Patent activity also spikes interest, especially when it comes to battery materials and separator technology. Data from models like discounted cash flow show projections turning positive in future years. For example, some estimates show future free cash flow of about $189 million in 2029, rising toward $788 million by 2035 if things go well. That implies the business could generate real cash in that time frame. Analyst forecasts are mixed. Some models are bearish. Many analysts have issued hold or even sell ratings based on current valuation and pre-revenue status. For example, consensus price target is about $5.88 for QS, which is significantly below current trading levels. Other forecasts put upside potential higher, but with wide variation depending on assumptions. Forecast models also project strong growth in revenue and earnings under favorable assumptions, but those are projections under ideal conditions. What are the upsides if QuantumScape executes well? If their new manufacturing process Cobra works at scale with consistency, that could give them a competitive edge. Faster and cheaper separator production lowers cost and manufacturing time. Partnerships with large automakers provide a path to industrialization, licensing, or co-production. If demand for solid-state batteries climbs because of EV adoption, regulatory pressure for cleaner energy and safety concerns around current batteries, then companies that are ready first could reap outsized rewards. If their cash flow projections and scale assumptions hold, QS could transition from research to generating product revenue in the coming years. Investors who believe in the solid-state battery vision and are comfortable with risk might see this as one of those moonshot potential plays. The addressable market for EV batteries, energy storage, and portable devices is huge. Another potential upside is sentiment. Battery materials and solid-state developments attract speculative capital when there is patent news, manufacturing improvements, or policy support for EVs and clean energy. Strong news flow can amplify gains significantly, but there are heavy risks. QuantumScape is still pre-revenue. There is no guarantee of product sales, mass production, or profitability in the near term. If scaling fails, many investments in manufacturing process, materials, and infrastructure may not pay off. Manufacturing risk is real. Solid-state battery production faces technical hurdles such as durability, cycle life, cost, scale, materials defects, and quality control. Even with the Cobra process, stepping up from pilot or small production to mass production is non-trivial and expensive. Valuation risk is high. The current stock price often reflects expectations and future potential, not current income. If milestones are missed or reports delayed, sentiment could reverse sharply. Funding and dilution risk is also present. Research, manufacturing build-out, process improvement, and materials cost money. To stay solvent, QS may need to raise capital. New equity or debt could dilute existing shareholders. Competitive environment is intense. Many companies are pursuing solid-state battery technologies or alternative battery innovations. Some have deeper pockets, more mature manufacturing, or better supply chains. If QuantumScape falls behind, they might lose licensing, partnerships, or market share. Timing risk matters too. Even if everything goes right, commercialization could be years away. Regulatory approvals, industrial scaling, and cost reductions take time. Investors need patience. If the market expects near-term profitability, those expectations may be unmet. Partner and contract risk also exists. Even with partners like Volkswagen, there can be delays, changes, non-exclusive agreements, or contractual terms that are less favorable than assumed. What I would watch if I were evaluating QS: progress with Cobra process. Are they delivering consistent quality, yield, cycle life, and reliability? Patent grants and portfolio expansion, especially regarding separators, cell safety, lifetime and cycle performance. Announcements of revenue, licensing, partnerships, or purchase orders. Even small orders help validate the tech. Cash burn and cash on hand. How long is their runway? What is their research expense versus capital expenditure? Analyst revisions. Are price targets moving higher or lower? Competition movements. What are other solid-state battery companies doing, especially around separators, lithium metal anodes, and licensing deals? Regulatory and policy environment, EV incentives, subsidies, clean energy mandates, and safety regulations. Insider or institutional investor behavior. Are insiders buying, or are big institutions increasing or decreasing exposure? Technical performance metrics, energy density, cycle life, safety, and charging rate need to improve. My view is that QuantumScape is one of the most compelling speculative plays in the EV battery and solid-state battery space. The potential is large and the upside meaningful, but it is not for the faint of heart. If I were putting money in, I would allocate only a small portion of my portfolio, money I can afford to lose, and expect volatility, delays, and possible setbacks. This could be a multi-year hold if everything aligns: manufacturing breakthrough, partnerships, and revenue growth. But there is also a high chance that things take longer or costs run higher. Wrapping up, QuantumScape is a high-potential and high-risk stock. Strong news flow like Cobra process and patent activity suggests positive momentum. Analysts are cautious due to lack of current revenue, scaling risk, and valuation concerns. If you liked this breakdown, please hit like, subscribe, and drop a comment. Do you believe QS will be a leader in the solid-state battery revolution, or is the hype already baked in? Thanks for watching. Stay informed, stay patient, and always do your own research. I am not a financial advisor, and nothing here is a recommendation to buy or sell any security.